world can learn a lot from Australia, so read the headline on the cover of the Economist magazine today.
It described Australia with 27 years of uninterrupted growth as a nation that has not suffered the political and economic troubles of other countries. Aussie rules, it reads. And it means it's time for Taking Stock with Richard Miles, Pro Vice-Chancellor of Sydney Uni, and Scott Phillips, who is from the Motley Fool. Thanks to both of you for joining us.
Hey guys.
Yeah, we are the lucky country. We know that. We've had 27 years of uninterrupted economic growth. There is a joke around markets that once you land yourself on the cover of one of these magazines, that it is the kiss of death.
Yeah.
Can we believe that? Is it all about to come to an end?
Didn't you say no political troubles, or political and economic? I don't know what they've been doing.
Okay, so that was the outsider's view looking in.
Maybe they got the political bit confused with Austria or something, because I don't think you can say we've had, what, 84 prime ministers since the turn of the century.
Yeah, about that.
I thought that had been written by somebody who'd been to Australia on holiday.
Yes, that's right.
Had a great time, yeah.
It was a weird sort of thing, wasn't it?
Travel writer, maybe.
That's what memories of...
Yeah. But it maybe does speak to the point that we all think we're whinging and we think we're all worse off than we are. It could be true. Jerry Harvey thinks that.
I think there is something to that. We've talked before about the doing it tough myth here during the GFC.
Yes.
And I think we're quite good at self-sabotage here. And I really think we lack a little bit of confidence. Even in the business world, we lack a bit of confidence.
Oh, really?
Yeah, I think sometimes we look overseas and we think that people are doing better and are better than we are, which is not the case.
And it seems that they could be looking at us and thinking the same thing, Scott.
I think they're right in this case. I think Richard's exactly right. I think we've lost perspective. It kind of goes. So the GFC was the big moment, right? Where we all felt like somehow we talked ourselves into believing we had the GFC the same as the rest of the world. There was no recession here. Our banks didn't have any particular troubles. Unemployment hardly moved meaningfully at all. It didn't happen. For all of the GFC talk, and yes, we can argue about politicians doing the right thing and the wrong thing and avoiding it, but the reality is we didn't go through that. Then you had kind of the political, it's a political kind of trope now that every politician comes and says, I know you guys are doing it tough, we're going to help you. Because playing to our perceptions of doing it tough makes politicians seem somehow, you can't be a politician come and say, you guys are okay, stop whinging. So they all say from right across the spectrum, you're doing it tough, I know how hard things are, we'll fix it for you. And so we've kind of got this weird sense that we're doing terribly. If you look at every economic indicator in Australia, it is hard to find a single one that is doing badly. No, they're maybe not as great as it possibly could be, but you know what?
Actually, no, I was looking at GDP per person was at record highs as of June this year.
Yep.
And so was household wealth. So household wealth is at record highs.
Unemployment at 5%. Growth is decent. Is growth at the highest possible point? No, of course not. Is unemployment at the lowest possible point? Of course not. By the time when we get to that, that's when interest rates are going up. That's when you're at the top of the cycle. Do we really want that? Be careful what you wish for, because when we get to that point, the next move is going to be down by definition. We are a pack of whingers. Absolutely a pack of whingers.
Totally. Look,
I'm glad you said that.
I can say
rather than
I can say that.
Look, it's an interesting point because a lot of the stuff that was getting pulled out in this article is stuff that we think are issues here. They were talking about our stance on immigration is kind of good for the country and everything's going well. Something that comes up a lot in debates around the political sphere as well. Superannuation was another one. That, of course, has been picked apart lately and people are wondering about what's best there. There's been some other stuff, public debt being low, but of course private debt is incredibly high. That's what the RBA is kind of terrified about. So Australia's problems compared to other countries' problems. What do you think?
I think, look, I've just been in Italy. I was in Italy for a week. And you should hear the immigration debate there. You should hear, and if you look at the new government there, I mean, it's extraordinary. And in terms of what the national debate is, and Italy's actually doing okay at the moment compared with other European countries economically, but still, it could easily be pushed into recession.
Now,
you don't have to be. Let's say everything's okay. Household debt is too high. I completely agree with that, right? But again, of all the settings, to your point about Italy, Richard, I think it's one. I've worked for some pretty good companies in my time, and you hear people whinging when you're working at some decent businesses. I've been at some bad companies, some good ones, right? You kind of want to say to those people, go and work somewhere else for a month, and then come back and tell me how terrible this place actually is, And it's that sense that we just lose perspective. If we're on this little island at the bottom of the world, doing very nicely, thank you very much, spend a week in Italy, spend a week in the US, spend a week almost anywhere else. You'll come back and say things are pretty good.
I imagine most people would say yes. We offered them a week in Italy.
Now, for an extra laugh, I prepared something earlier, which was the 1979 cover of Business Week. This is one of the most famous magazine titles that people will recall. It had the title The Death of Equity. So that is from 1979. Now, the 70s was a very bad period for the stock market. It was a whole, well, generally the decade looked pretty awful. Turns out, after that, in 1979, stocks went on to enjoy a bull market for the better part of 2 decades. So for 20 years after that cover, stocks did well. And even if you account for the 2007 to 2010 financial crisis, stocks are still above the levels of that Business Week cover, The Death of Equities.
Go back to 1999, May 31. Wall Street Journal headline, Amazon.bomb. If I could have bought some Amazon 19 years ago.
Oh, why didn't I put that one on the screen tonight?
That's what I'm here for.
We were spoiled for choice. There's been a couple of them. People ignore the ones that were actually on the money, of course. There was a Brazil one that was famous, and then it was like, a few years later. What happened to Brazil? Thoughts? It's generally the...
Thoughts on this kind of thing? I think in some respects you're just setting it up to go the opposite way, right?
Yeah, I think that's so true. In fact, Citigroup studied it, and they reckon the Economist magazine, they did 20 years worth of covers, and they worked out that it was a contraindicator.
Oh, no.
Contradicting indicator. So I'm just saying, you've been warned. Just in case it happens, we warned you. We showed you that cover right here on Your Money Live.
There's a couple of those sorts of things, though. There's some people that say that when you get into a taxi, and if the taxi driver tells you, oh, hey, have you heard about Bitcoin? You know, thinking about the big banks. Scott, you're an equities guy. I mean, is there anything that just kind of goes, oh no,
reverse
okay,
indicators.
I'm out.
What else?
The Uber driver in the last 12 months, or not so much the last 12, maybe go back to say May and the 12 months before that. Every Uber driver was trading cryptos on the side. You couldn't get an Uber without the guy.
Right.
I know.
And actually, Uber drivers always are doing something else. So they're all entrepreneurs, right? So, you know, they've always got some great business idea. I mean, you know, I almost miss the sort of black, you know, the black taxi drivers in London. Right. And that's what they did.
Yeah. We got to talk beer, apparently, because there's been a survey out showing, I mean, this is a Money Channel, right? So we're talking about the cost of beer, of course. And where it's most expensive in the world, $17 is the world's most expensive beer in Dubai. Chris has prepared this little chart for us tonight.
Yeah, I think it's pretty interesting. So that's the $17 Aussie. This is all in US dollars, of course. But so Dubai, you're looking at $12 US for a pint. Oslo, $10.30. Hong Kong, $9.80. 15th on the list is Melbourne at $6.80, which is actually looking pretty good. I don't know, you know, where exactly they're getting them.
US dollars.
Okay, fair enough. Yeah, I've forgotten my own rule there. And then number 20 was Sydney. So, I mean, it kind of gets us wondering, when you're on holiday, is any price fair enough?
I want to know where you went to get a pint of beer for $6.20.
You've been hanging out at the uni bars.
Not even in the uni bars, but in these suburbs. I mean, I went out last night. I had a schooner that cost about $9. So, I mean, you know.
You've got to do the conversions. That's
exactly. But it did get us kind of wondering and questioning, like, this is around the world, you know, if we're going on holiday, is it, you know, a crisp beer after you've gone on a big walk in a foreign city, is any price fair enough? Scott, what do you reckon?
Where in the world do you like to sit beer?
Speaking of Italy, I've been on a very long walk through a very hot Rome before, and I have to say, the beer at the end of that walk was very, very welcome. There you go. I will say too, by the way, this brings new life to the Melbourne versus Sydney debate. Melbourne beer is more expensive than Sydney. Most livable city? I don't know. If beer's your benchmark, I reckon Sydney's coming back up in the stakes just quite.
I once bought a round of beers for a very large group of people in Stockholm, and the bill came through, and it was just like one of those moments where you put your credit card over and you just open it.
Oh, no.
Never again.
It was Stockholm on your list. Come on.
Well, Stockholm, I don't have it in front of me. But what I do know is that the bottom of the list, the cheapest, $1.50 US, was Manila in the Philippines. So the whole kind of Sydney, Melbourne, what does the beer kind of play in there? I don't know. We're all going to head over to Manila for a cheap beer? Maybe.
I reckon there's got to be a Your Money Live junket, doesn't it? We've got to go on the ground research, and I figure if the beer's cheap there, it's going to be cheaper for the network to send us there. So I'm just saying, maybe a couple of weeks' time, live from Manila.
I don't drink beer, but I'm very Australia proud, and I think if I was going to drink a beer anywhere, I would drink it in Perth or somewhere on the west coast overlooking the sunset. I think Cable Beach, up in Broome. I think that's where I'd drink a beer if I had to, and I'd pay anything, I reckon. That sunset is priceless for me. Yeah, we'll go there. That's our junket. We're also looking at the self-serve checkout.
Yeah.
Which, you know, apparently everyone's been through the self-serve checkout and misscanned something or allegedly put in the organic carrots as a plain old carrot.
sounds like an absolute nightmare. I mean, the idea, it seems like a very labour-intensive way of committing theft. You have to go through, getting this, is this, how much more is this than that? It sounds like a complete headache.
Well, we're going to be watched now, apparently.
Yeah, and this seems to be kind of how much of a risk, because you talk to a lot of people and they say, oh yeah, you know, if I'm honest, I do this. And maybe that is the absolute, that's where they can kind of break the rules but still call themselves a good person. I don't know.
I think people feel like the supermarkets owe them something.
Yeah,
because you're now bagging your stuff, you're bringing your bags, and if you don't bring your bags, you pay, and people feel like, well, you know what, if I scan a carrot that's a bit underpriced, I'm not going to worry about that. But the thing is, there's new... I don't know why I picked that as an example.
It could be a lot.
That's a good example.
Well, so is that what you do? You skim a bit off your avocado or something like that? Over the bag.
There is going to be new technology that is apparently going to be watching all that. It's going to be able to work out exactly what's going in there, because this is actually a big problem for, I think they call it blood loss or something in the supermarkets. They don't like to talk about how much they lose, but it is theft. Yeah. I must say, they say the biggest problem is people scanning through the veggies and the fruit wrong. But you have to type in, you know, the letter, you have to scroll down. If you've got two kids, you know, pulling both arms and you're trying to scan, it's like, I can see people just go, come on. So I think to be honest, I think they should blame their own technology that they do have, because if that's the biggest area they lose money on, well, of course it is, because you have to actually start typing stuff in. And people are over that.
This could be an urban myth, but there was a story once that in Britain there was a post box inside a supermarket, and they found these thieves were posting really expensive items to themselves.
Oh, really?
What a scam. Amazing.
That's where you get the technology, right?
Hey, that's... well, I think it's worth a crackdown. They reckon we're all doing it. Yeah. I don't even think we don't pretend. But anyway, we've got to get a final thought from you on the stock market and where it heads next week. You're welcome to throw in some thoughts.
I'm just going to be listening.
Yeah,
please.
This is the worst but best answer. Nobody knows, and neither do I. And anyone who tells you they know where the market's going next is lying either to you guys or to themselves and to viewers at home. This is that no one can know where it's going to go next. What I do know is that over a century and more, the market grows about 9 to 10% a year. We've talked about this number relatively regularly. It's volatile, it's up and down, it's all over the place, but the market grows over time because it's based on the fundamentals of the businesses that earn more and more profit every single year. That's a really, really boring answer, but it's a really important one, because that's what keeps people in the market. If you get that, then you're going to stay invested, you're going to keep doing your work, keep putting the money aside, buy shares every month, every quarter, every half year, whenever you can afford to. Dollar cost averaging is always going to be the winner. Again, no huge tips, no great, you know, whatever. This is how you build a nest egg over months, years, decades. That's how you retire well, by investing regardless of what the fear is in the streets.
All right, that's the conversation that will dominate Scott Phillips next week. Richard, you got a conversation brewing that's going to dominate your week next week?
Not really, but I'm interested in what Scott's just been talking about. I mean, I think one of the things, so my uncles were stockbrokers, and they always used to say, fear, state of mind, etc. When these things go down, sometimes it's just like lemmings, just people panicking and rushing out of things. So difficult to predict.
Absolutely true.
$50 billion is a pretty juicy headline, but I suppose the kind of one-day loss. But I suppose the thing is, you've got to look further. It's
real, right? So the loss is real. There absolutely is a decent amount of money being lost. And the market's down 8.8%, it was yesterday up till close in October alone. Now, if you've got $1 million nest egg, you're getting close to retirement. It's the price of a very expensive car that you've lost in the space of, what, 20 trading days? That feels really tough. That hurts, right? So I get how people feel. The thing is, when it went up 10% over the last 12 months, we didn't sort of feel like, hey, great, I've earned that money. And we feel the loss, we know, about 3 times as much as we feel a gain of the same value. So when the market goes up 5%, we don't feel it. When it goes down 10%, or even 5%, we feel triply worse, and we feel like we should do something about it. The urge to do something, what's that quote? All of man's troubles stem from our inability to sit in a room quietly alone. That's kind of the thing, right? Just leave well enough alone. Keep investing. And probably is blokes, by the way. I said men, that was literally the quote, but I think that's probably about right too. Women are better investors than we are. So, just stick to it. Yeah, the headlines are scary, and the movements are scary. These are real movements that we're talking about. These aren't, we should talk about them, they're worth doing. Just remember that the antidote is keep investing regardless.
Right, thank you guys, appreciate it. Scott Phillips and Richard Miles, thank you very much. Great to see you both as always.